Hey guys, how's it going? Welcome to the midweek market update. Hope you're all having a good week so far. Before we dive into the breakdown, I'm just going to do a quick little, mini lesson discussion on types of structure breaks, as I did have a question about it. So let's say we have an example where we have, a decent swing push up. We're in a bullish trend, and we have a small minor pullback, and then price pushes up. And then we start the swing pullback, but the pullback breaks this minor low here, right? And then we pull up, and then we have another break of this low here, and then we pull up, and then we have another break of this low here. Now, the way I define these is I would count that because that's a minor pullback. It's a minor low that caused the break of a minor high. I personally would count that as a emboss, a minor break of structure. So just put that to the bottom, and then because this low has now been broken, I would then count this essentially as sort of the next minor structure that we are within. So then that would also be a minor break of structure, and this would also be a minor break of structure. So essentially we have our our swing high up here and our swing low down here somewhere, right? So at this point all of this is just a pullback. Right, let me draw the next example actually before I kind of talk about this in a bit more depth. Then another example would be exact same scenario, except we have one big push up. There's kind of no minor pullback in the leg. It's all one leg up. And then we have a pullback, a break of this low here, a pullback, and a break of that low there, and so on. Now, for me, the subtle difference is because there was nothing in the leg that broke, these are all substructure breaks. So let me just quickly annotate them. Esboss, I guess we can change the to dashed, whatever. There we go, and then here. It's just about neat enough for my OCD, but there we go. So, I mean, there's no super hard and fast rule about how you want to define this. Really, it's just going to be kind of what makes most sense to you, and just stick to something, yeah, like I said, that makes sense to you and that you can work with, because ultimately everything between the swing high and the swing low, so again in this case swing high right and the swing low, everything in between here is technically substructure, right, if you want to define it that way, because it's all structure within the swing points, right, within the swing high and the swing low. So arguably minor breaks of structure are kind of substructure as well, but it can be important, or it can be useful to separate the very subtle difference that there is between them, because in this case here, yes, we have, say, double and then a triple break of structure to the downside, right? 3 lows are broken. Those lows are, I would say, less significant than when we break something in the previous leg and we break a minor low, because at this point, all this is a quick daily pullback, right? And then we could easily break that, right? We can break this high here, and then we can start to go on, and continue that overall bullish leg. So why that's important is because if you're trying to play the pullback and you're trying to short this moves the downside, let's say this is a 4-hour pullback in price, obviously there's going to be loads of opportunities on lower time frames to get short, and then if you're looking for price to say come to these levels, okay, fine, and then let's say again you're looking for here, well, price could easily just smash up through that, or at any point like this one here, it could just smash up straight through, because all you have is a substructure break and it's not as significant. So yes, it is tradable, but you need to pair that with the whole story, the whole narrative, loads of other confluence that you want to use. It's you can just make a very simple hard and fast rule that you're not going to play a counter trend move or a pullback until you have a minor break of structure, for instance, or something like that, because substructure breaks are not as significant, and this pullback could be very quick and could end and we could continue on going. Whereas in this case, because it did break a minor piece of structure in the prior swing leg, that is slightly more significant, right? So now that this piece of structure has now been broken, right, we're now kind of essentially playing within this piece of structure. So that's why this then becomes a minor break of structure. This is its own piece of structure, and then that becomes a minor break of structure, right? And then if we were to break this, I would also then call that a minor break of structure, but obviously to the upside. So you can see how it can get a little bit confusing of the difference between your definitions, but really it's just because this showed a bit more, it's more significant that it managed to actually break a minor low, because that minor low on one time frame is going to be a swing low on a time frame just below. Whereas say this is the 4 hour, right? We've had a strong push up on the 4 hour chart. It's likely on the 15-minute chart that it probably hasn't really broken anything. So the 15-minute chart is probably still bullish at this point, if you're trying to short that. So that's just why minor breaks of structure are generally a bit more significant, because it's, well, I hope it's a bit obvious, but you kind of broken more significant structure. Now in this case, again, I would say once you break this high, I would also classify that now as a minor break of structure. So I think it's slightly different to, I think, the diagram I used before in the original webinar, because before I kind of defined everything between the swing points as all substructure, which again it kind of technically is, but the reason why I then view this break to the upside, that kind of pro trend break, is because essentially it's managed to now break, this is one, I guess, structure of its own. It's kind of forms its own structure with these substructure breaks that becomes a leg of price, and now if price can move up and break the structure, form that higher high, that to me is reasonably significant. Like, that's a significant move. It's managed to break this leg of price, rather than just this is just literally just a pullback. It's breaking lows that didn't achieve anything, right? Whereas this, when it goes up, it breaks a high that it managed to break a low. So this high has some significance to it, right? And now price has shown some decent movement to get up. So you can draw a lot of these kind of examples of different structure, and you can make more complex examples, and it can get a bit confusing if you try and define kind of every single break of structure within the swing points. It can get a little bit pedantic and unnecessary to start labeling, is this a minor break of structure, is this a substructure break, and it can be a little bit, I guess, how you want to define it yourself. So I just try and keep it simple, because it's not going to make a huge difference to your trading, other than in kind of more obvious examples like this, where basically, have we broken anything in the prior swing leg? In this case, it's a clean push, right? So we haven't. So all of this for me is substructure. So yes, you can short these moves, right? You can look to get the lower high of the substructure, but you have to be aware that that is a lot less confluence compared to here, where we've actually broken something in that leg, and that gives you a bit more of a warning sign that eventually this potentially could turn into that swing trend change, right, where it could lead to a true swing boss, or maybe just at least a sign that we're going to have a bit of a deeper pullback. It's just more of a significant bit of a move. But yeah, ultimately, don't get too confused with trying to define them. It can just be a little bit unnecessary. But a simple rule, I would say, would just be that you want to see that minor break of structure before potentially you want to play a counter trend move or a pullback. But it is going to depend on how the higher time frames look, how much space, how much risk to rewards there, how early you're in the there's just way too much to kind of make a firm blanket rule. You can do that, and you can make trade plan very formulated in that specific way, but it can be a little bit unnecessary. Now, a good example is to go over some of the price action that we have discussed before on the 15-minute time frame the other week, here on euro dollar, where we were essentially, if you remember, coming down into, just kind of get our bearings here, this whole section of price action, right, where we're coming down into this daily, weekly, and 4-hour area of demand. We were struggling to break lows. We had the bias that potentially we could start to see this change trend and break up this upside, which is what ultimately happened. But when you're trying to kind of time this on the 15-minute chart, you can use that to your advantage to try and get in long before the 15-minute chart has switched bullish, because at this point in time, this was the swing high, right? This was the swing low. And now, you can wait for this swing high to break up until this point, and then you can start to look for the longs, right, to get the move. And again, there's nothing wrong with that, but you can just be sitting on your hands a long time when there's plenty of tradable moves down within here. So yeah, if we look, this was the swing low, we never closed below, but what you can then look at, right, is we've had a movement down, we've had a minor pullback, and then we've had what I would essentially classify as that substructure break. And then we come up and we break this previous high, right? So for me, I would count that as a minor break of structure. That's an emboss, right? And now you're essentially playing within this minor sort of range, right? And then we get another minor break of structure there. So we've had two minor breaks of structure, right? So you could have seen that first one and gone, okay, I'm happy to get in long from it within here, right? I personally, I would be happy to start to look for that, especially when you consider, right, all of the other higher time frame confidence of where we are, how prices got here, how it's struggling to break the lows, yada yada yada. And that's what I mean is, you can, but I wouldn't necessarily recommend just having a blanket rule of, as soon as I have an emboss or I need to see, this to get involved, because it depends on, look how big this range is. This is a highs all the way up here. There's plenty of time, to get in and have that risk reward before potentially, this easily could have held this 15-minute high, and we could have continued bearish, but there was plenty of room to play up into awards there with the potential that we were going to change trend rise. But anyway, the real point is, right, is when price had that minor breaker structure that gave us that change of character as well, and then we had another one here, right, and then we had a pullback, and then I would count that as another minor breaker structure. So there's your third breaker structure in a row. And yeah, now this is where it gets a little bit tricky, right, because technically if we take out this low, which we did, and we just about closed below it, then you could say that the minor structure, right, within this whole bearish range here has now switched bearish. But this is kind of what I mean by blanket rules, is if you just go, okay, now it's suddenly bearish and I'm only looking for shorts, and you're expecting then price to come down, sometimes it's going to work, sometimes it's not, because you haven't taken in the whole picture as it's, the whole story as a whole, right? And yeah, I mean, it is a bit of a tricky one, because if you're super mechanical, like I said, it did close below, but you have to kind of read what's happened. We struggled to break this 4-hour and 15-minute low. We're coming off 4-hour daily demand. We've had multiple minor structure breaks the upside, right? We pretty much had 3 in a row there, and then we've had one minor one there, which, as you can see, what was it? It was perfect, literally to the pit, perfect equal lows, coming into this S&D flip down here, and it was just a grab and liquidity. And that's why minor and sub, both of those structures aren't as important as substructure breaks, because you can just have a quick break of it and then it could switch, the other direction again, which is what ended up happening here. It ended up just being a liquidity grab, and then it went overall. Now, another thing you can use to help your decision in this case is, what did this move when it started to sell off? What was it reacting to? What had it mitigated? Well, if you look across, there's nothing here in the 15-minute, right? It's just a straight candle. Now, if you were to look on probably the 1 minute or second time frame, you'll find what it mitigated, but you don't need to, because what you can say is, okay, well, on the 15-minute, I can see it hasn't mitigated anything on the higher time frames, right? It must be something like a minute or a second thing that has caused this move to come down. Now, when we've come down, I have a suspicion that it was just a liquidity grab. You could be saying to yourself, right, and what have we reacted off to push back up? Well, we've reacted off clearly M15 demand, right? It's an M15 zone. There's clearly, whether you refine it to this kind of flip or you're just looking at this whole area, right, you can clearly see this is the extreme, right, of kind of this 15-minute push up. So what you're looking at is 3 bullish minor breaks of structure and an M15 demand mitigation versus 1 barely minor break of structure and a very, very lower time frame mitigation. So that's kind of some extra confidence that you can use to help you go, okay, I'm going to kind of ignore that. I'm going to generally view this as kind of the push up. I think the character of price is changing. This is simply a pullback, right? Pretty much playing within this kind of minor high and low here. And use that little bit of discretion to look for the longs. Now, again, there's nothing wrong for looking from the shorts within here. You just kind of have to manage your expectations and also be willing to try and, if you can look for the flip within here and you see an entry, like also be willing to hold on to that and read the whole picture of itself, right, to then try and get that move. Now, it's pretty tricky, especially when it's happening in a live environment, when you see that breaker structure here to the downside. But yeah, that's why I'm saying, you can't always have these super simple sort of blanket rules. Sometimes you need to kind of just read the whole picture and kind of make that judgment call and go, okay, I think it's probably a liquidity grab. But also, you guys know we have the ability now to, take hedges in either direction. If with you're getting an entry, although this is a very small move or a very small range that you're playing with on the M15, right, to try and get in long here and try and get in short here and see which one works. If you're looking at M1 or 15-second entries, right, we know that that's more than enough room to move to break even. So you can be in a long, you can be in a short, remove your risk and just see which one wants to go and then hold on, right? So yeah, I think hopefully that kind of answers the question. It's a little bit more of a discussion on the differences between minor breaks of structure and substructure breaks. But yeah, you can see how it can get a bit confusing with which ones you want to define as which, because ultimately, at least for me, the way I view price is what I really, really care about is the swing points. As long as you have those correct and you know where you're playing within the range, then it's not going to massively matter, whether you're defining it as an M-boss or an S-boss, because for me, they're all substructure really, because it's all within the swing high and the swing low. But yeah, when you can kind of read it and it makes sense to you, like to me, I view that as a minor break of structure, right? It's broken a minor high in the previous price leg. We've essentially kind of, switched bullish in terms of that internal structure, the substructure has switched bullish. I'm kind of wincing as I'm using these phrases because that's why it can get confusing depending on how you want to define things. But as long as you find something that makes sense to you and you can visually see, right, we've had that change of character because we took the low and then we took the high. We've essentially had that internal bullish trend change. We've come in here, we've failed to break that low there, and then we've come up and we've broken that high again. So now we have what? Get rid of these drawings. We have one minor break of structure, two minor breaks of structure. We get a pullback, we get another minor break of structure there again. That's 3 in a row. We're coming off a level where we know we kind of want to be getting long. Yes, technically we did then break below that minor low, but we can see there was perfect equal lows there. There's M15 demand here, pretty much kind of at the extreme of this push up versus, coming off nothing here, at least on this time frame, so it's not as significant, and we've moved straight back up into it. So by all means, look at the short here, but also if you're in longs, don't be afraid to hold them, or also look for that hedge, right, to try and get in long, and don't be surprised when that move there happens. So yeah, hopefully that clears up a little bit. Of course, if you have any more questions, don't be afraid to send them in. But kind of going back, I've deleted them, but if you think about those examples I drew at the very, very start, kind of keep it simple. Keep it to those really simple examples of how you want to define it in your head or in your plan. The difference between a M-boss and an S-boss, and don't go any more than literally just thinking of it like this, right, where you have a bit more of a minor structure break. And if you see that go, and then we have some pullbacks, although this could still be that pullback right before we go, I would still view that as more significant than we have one clean push and then these substructure breaks here. So I would rather short this lower high than short that high, right? This to me has more confluence, and that's just why you may want to have the definition between an M-boss and an S-boss being different. But ultimately, all these pieces of structure within swing points are ultimately substructure anyway. So yeah, don't get too worried and caught up about all of that. But yeah, anyway, I don't want to rant too much more about that in this video. So let's have a quick look at what's been going on the last few days of the week. So we are pretty much still in the middle of New York session. Hope you guys know I'm not really actively trading at the moment. So yeah, I just wanted to get this out now whilst we've got some interesting price action going on. So yeah, last week we switched bullish on the daily chart. We got that daily breaker structure. We had a pretty nice 4-hour move, and we are now playing within this 4-hour range. We came off a really nice area of supply, had a decent change of character there on the 4-hour chart, which was what? That was our break of structure on the M15. So the M15 then switched bearish, and we're essentially looking to see if we could play this 4-hour pullback at minimum down in towards this inside bar flip, right, because this was supply here, particularly on the 1-hour chart, had a reaction, and then that's where the demand came in to then actually cause the 4-hour to switch bullish. So really nice level there, but with the potential we could come down lower below that EQ, right, and down into maybe some lower discounted prices there on the 4-hour chart. But as we know with EU, it doesn't necessarily like to come back to the extremes or even the EQ when it wants to start trending, right. So two ways we can try and get in early if it doesn't come this low is either from a significant demand zone, or what, it pulls back, it builds liquidity, it sweeps that liquidity, and then it goes, right? And in this case, it's done both. It built that perfect equal lows there, swept it into a really nice demand zone, and at the moment it looks like we're rocketing off. Of course, we are still yet to break this high, so that remains to be seen. And on the M15, we are still bearish because once we broke this low, we were playing within this range here. Whoops, that high all the way up here. And then, yeah, just during London today, we got a break and close below that low. So now, as you can see, we're playing, as I've marked out, that's our high, and this is our low here. And we haven't quite had a closure there above, but I probably assume that we are about to switch bullish on the M15. So yeah, that's kind of the higher time frames. Let's have a look at the M15 itself, as this is kind of where, I guess for the majority of us, our main focus is. For the most part, outlining where our structure is and where those POIs are to then get those lower time frame entries. So yeah, so this was going in from last week into Monday, so we started to have this pretty complex pullback right now. Areas that you can look for on the M15 to look for that lower high to form. First obvious one would be that M15 doji at the decisional. That's kind of spiked into pretty much at market open, so excuse me, technically maybe that was just a spread spike and it didn't actually really tap that many orders. However, by the time we get into Asia and London, we're starting to push up higher. Now this zone here I much preferred. I think I did explain on the weekend, but I definitely did talk about this on our call on Monday. And the reason why I liked this one is because for me, this is really where kind of the M15 switched bearish, because we had this last point of demand, right, the extreme that broke the high. and then this is where the reaction is, right? We reacted to it. That's the low of the reaction, and then that's where the reaction failed. Where did that supply come in? It came in from this candle here. You could have refined it to the wick because it's quite big, but obviously we're just looking for those confirmation entries. We're not necessarily taking risk entries. So as soon as it came into here, looking for shorts is more than valid and a high probability in my opinion. We're above the EQ, right? We're in premium prices now. So yeah, anywhere in here to then look for the short and target this low. Boom, game on. Yeah, and then what do we get? Kind of got the M15 change of character back to bearish, right? And then we're starting to get those lower lows and lower highs, but then towards the end of Monday we then got another change of character, right? Because that was the high, that was the low, then we broke the high, and then you could have potentially started to look to play longs back in towards there, but I'm not even going to cover those when we go down to the lower time entries, because just for me it's not really the type of area I want to be trading or would recommend trading. But you know, it's there if you want it, right? If you want to keep following that small bullish price action for little trades until what? Until we get that M15 change of character, which is then what happened here, right? We had the movement up, we had the pullback, we had the break of the high, and then it fell to make a higher high, and then it broke the low. So once we broke this low here, M15 change of character, right? Back bearish, back in line with the overall bearish trend, right? Because that's still the swing high at this point, and this is still the swing low. And then it's go time now to look for those M1 entries to then target that weak low again. In terms of supply over here, you know, if you were looking to try and time where this lower high was going to form, all of this price action is very, very messy, right? It's not really that obvious. You know, the obvious zone to take would always be the one at the extreme anyway. But when you've got kind of quite efficient price action, you can keep it simple. And like I said, just look for that change of character to occur. And, you know, in this case, it was pretty clean because it happened right at the top anyway. And then we got it. And then that was a real kind of simple trade idea to then execute this to push us down to the low. And you can obviously look for hedging opportunities. I haven't got them drawn at the moment just to keep the charts clear, but we had kind of two areas you could look at. The first one being this one, which there was a hedge opportunity. Real nice flip within there, which we'll get into in a minute. And then obviously another one down here at the extreme, which we then got that pullback yesterday evening, Tuesday evening, where we then got another change of character. And then this is what I'm saying, you could play kind of those slow counter trend movements back up again. But really, when this is happening today, I'm just following the exact same thought process as the day before, right? Where you're just looking for price to come back up, outline the areas above the EQ, back up in the premium. There's kind of three areas I was looking at. Was one, this buy to sell wicks here, they were still unmitigated, this area of supply, and then this one above was actually kind of really pretty much mitigated already. So only really looking at two main areas, and we ended up reacting off the first one here. To be fair, we did actually push up a little bit higher than those wicks, so you know, technically that supply zone did fail. And what we actually reacted to today during London from this move here was the base of this 4-hour doji, right? This kind of pivot supply zone, the up move and the sell move. Nothing major significant, but that's pretty much what price then tapped into to then go. And you could have looked for a sell as soon as we were in there, which I'll cover in a minute. Or if you want to just, again, wait for that change of character, wait for price to come back in your favor. That's what we've got it, right? Down move, up move. We wick the down move. So for me, that's enough for a change of character, right? Break of structure, I want to see a candle closure, but just for that change of character, I just want to see that first indication that the higher low is no longer intact and we're making that first sign of a lower low. Boom, there's your supply zone, right? And then you can look for the short, and you've got that extra confirmation. You get another opportunity to get in with more confirmation, and then we finally take that low there, and then we come into that really strong 4-hour demand zone where we have the origin of this pullback as well in the M15. So I also had this inside bar outlined. I've deleted it now, but it was there. Price smashed straight through and came into the lower one. So I was literally just, you know, would be looking at the lower time frames just to see which one's going to get the reaction to. You don't have to take a risk entry, you can just wait for that confirmation entry and then you're in. But as I always say, if you do want to take risk entries, you're always better off taking the lower one, right? The one at better value, or at least covering your stop below that 4-hour zone, right? And then you'd be in a beautiful trade. So yeah, really nice higher time frame price action there. Let's take a look at the lower time frame zone. So the first one we're going to look at is price coming into here on Monday, looking to play this move down here. So actually let's keep them both open at the same time. So we did cover these on Monday, but I'll quickly go over them again. So yeah, there was the first initial move, and this is as soon as price came in and tapped in towards that zone, which would have ended up most likely being a loss depending on where you took it. So let's see. Obviously, it ends up building, you know, a nice big bit of liquidity that then gets swept. But before we know that's going to happen, you know, we do have a bit of a subtle sweep there, some nice equal highs. We do get a bit of an FU sweep. You know, price comes into demand, it reacts, and then it pushes down. So that's going to be your sort of FU sweep flip. to look for that sell entry. Now, it would have been running a bit of profit if you had just taken a limit order on there before it went. And I just think, more than a valid enough loss to take. You just want to keep, looking for the next re-entry if price then stays within, the zone that you are looking at. The only other thing I could say potentially you may want to add to your plan, if you want just maybe to give yourself a little bit more confirmation, is if it's quite a big push, obviously price has to come a fair way back, but more specifically that price has to switch bullish again, right? Because the M1 has to then break that high and switch bullish. Then maybe you want to wait for the M1 to switch bearish again or form another flip, or potentially wait for a 15 seconds entry within here, which it looks like it probably did give you one, just to give you a little bit more extra confirmation. But yeah, ultimately it didn't work out. Not to worry, we push up high, nice big sweep here, and then there was a super clean flip. So one or two ways you could have taken this. The first way is the most aggressive flip that we have, right? Where essentially you get short before the chock, before the break of structure there. So price comes in, it reacts, mark out the low of the reaction, we get the closure there, and then you just basically want to enter at market as soon as we're anywhere within that supply range, right? This whole range that caused the break of the reaction. Now, if you wanted to wait for a little bit more confirmation, wait for when we spike that low there, and then essentially price moves back into that area of supply, and then you could have entered that market again, or kind of get the second flip here. It's not kind of super clean, but the candle kind of makes sense, right? Where you have the reaction and then price goes. So that could be your supply zone where you may be looking to get short and price never quite makes it back up towards there. But when is that zone used? If you keep it on your chart, right, it's an unmitigated zone. And if you look across, right, it then kicks the move on Tuesday, and that's literally what price came up to the pip to mitigate. So yeah, that was a really tidy flip there. Don't let that momentum put you off. It shows you, right, we've had the big sweep here, big push up, mitigated pretty much all the remaining orders within that 15-minute zone. And then that was the move that goes. There was another subtle sort of flip here where if you were looking to the sell to buy wicks there, essentially a seconds time frame demand zone, price reacts, it pushes down, so then you could have been looking for a sell anywhere within that range, right? It would have taken a while before it played out, or maybe you want to wait for another flip. So you get one here during the London lull, right? Price comes in, it reacts, and then anywhere within that range, or you could refine it to the inside bar, and then that would have been a nice entry as well. Another good example where price comes in really aggressively, but just ends up working. And then, yeah, there was a nice hedge here, which I did outline that M15 zone, and the one I'm talking about is this one here, right? Where you could look for a hedge. Now, if I have these, well, I do, I have these kind of zones drawn on my chart, but you may want to make it clear, you may want to write a note in the thing if you've kind of forgotten, but I always know when I see these zones that they are literally just reaction points. One, because they're counter to the M15 trend, but two, what did this zone achieve? All it did really was cause the break of, that substructure break really, because that's a clean push down, right? There's nothing in this leg that price has broken. So all of this is just a pullback. So for me, that's just a substructure break. It's nothing really that significant at all. But it's a reaction point. It's a point to look for a potential quick sort of scalp if you fancy it or if it sets up. Am I talking about the right entry here now? Sorry, ignore me. That's the one that we get here on Tuesday. Forgive me. I will cover that one in a minute. So the one I'm actually looking at here on the M1, this one here is this candle here, but it's the same thing, right? Really all it had done. I guess we did get a minor break of structure there, but it's a clean push. It's not the cleanest of zone, but you can expect a little bit of reaction to play. And yeah, we got a nice entry there. So came in. This is where the flip occurred with this doji, close above, back into it, and there's your quick little trade. Also spoke about this a bit more depth on Monday as well, right? Because there's two ways you can view this if you don't refine. So that's the refined way. That's where the reaction happens, right? With that doji, boom, you're in, a little bit cleaner on the 15 seconds, but potentially you may have taken the whole buy to sell range, right? And that would be that. And as soon as you're watching this and price comes in, you're looking for where the reaction really occurs. That for me is where you can see the real reaction. Then we go and we break above. So then you would draw across the inside bar, and then that one gets mitigated at a later point. So two slightly different ways of viewing the markets, and both would give you long opportunities. But yeah, just thought I'd point those kind of varying views out. If I can refine this back to there. So really not the highest probability of trades in the world, but it's decent as well if you're holding the long and you want to try to hedge that position if you're trying to obviously run with the idea of running that week low. And then yeah, during New York we came down even lower, and then we started to push up, and then following the exact same thing again, like I said, waiting for that M15 chock if you want to, but as soon as we come up into the extreme kind of this move, so let's scroll across on the M1, have a look. So we ended up mitigating that previous M1 supply zone that had missed the previous day. potentially could have taken an entry there, but nothing I really like. Now here is where it gets interesting, because this is where we get that M15 change of character, right? We get that break below. We essentially create an M15 supply zone. Ooh, just looking at this. Fun times. Yeah, so then we break below, and then again, just looking for that M5 pullback, and then waiting for the M1 to flip, get that change of character. All right, pull up into where the flip occurred here to cause that M15 change of character. Even if you were looking at this zone here, right, we still don't get the flip entry until the same place, so you would have arrived at the same trade idea, even if you had viewed this flip that caused the M15 change of character slightly differently. And there's two ways you could have had this. I've got it at the moment, I think, drawn as the 15-second entry, but you can keep it simple and just kind of more the classic way, because it isn't really an M1 flip here because there's no reaction, because we have the higher low, we have the higher high, and we smash straight through, and essentially it's just an M1 pull back into supply and we go. So very clean entry there. But if you wanted the 15-second flip, let's have a look. If it will load, come on into that, there we go. Yeah, so I'll delete that and it's a little bit clearer here. So yeah, we have the higher low, higher high, we come in, we react, big momentum coming in, right, breaking the M1 low there. That's a warn, that's making it very clear that this is where the supply came in. Take the whole range, you could even refine it to that if you want. But yeah, anywhere within that range on the distal 2 pips. And you are in a beautiful trade with tons of confirmation. And then yeah, you catch the real nice run of that session. Scroll back across. If you want me looking at over here. And it's just a case of looking anywhere from here where price may react, and you can use those to start to potentially look for hedges or sort of more aggressive scalings later in the run. But this was okay, so this was the original M15 zone I was talking about, right? All it did was cause a substructure break over here, and essentially just keeping these on as reaction points to look for hedges and the one below. So let's look at the first initial hedge opportunity. I believe I did post a screenshot of this somewhere in Slack. It may have been in response to someone else's post if you didn't see it, so do have a look at the threads. But essentially there was two ways. One, as soon as price came in, look for that first 15-second flip, or if you want to be a bit more conservative, M1 flip is up here. Now, the mini lesson from this is that if you are going to take that M1 flip, right, and it's kind of further up, you're not getting that entry until all the way up here, the reason why you may want to leave that and skip that is because is the risk reward going to be high enough for you to kind of get the profit that you want before the pullback's over, right? When you're coming off a weak zone, it's heavily against momentum, it's heavily counter trend, it's against the M15 trend, the 4 hours still in a premium. This is not the best area to be getting along at all. So if you are going to kind of try and play these pullbacks, really you want to be getting in right at the start of the move, and not so much here. So the flip's there, the price action is there, right? You've got the supply zone, price comes in, it reacts, it pushes up. This is the area to get long, right? And then all this other stuff going on is essentially the 15 seconds. So I will show you that now. But yeah, I think have a play around with this on demo accounts, or just track it, with your risk reward tool. But if you do have the seconds time frame, you do want to do this. It's something I'm doing a lot more now. Literally, the minute it gets into a zone, I'm just looking, can I get in straight away in the seconds? Because even if, well, put it this way, no matter how shit the zone is, if it's an M15 zone, right, odds are it's going to get a reaction, probably a 10 pip reaction. A fair amount of the time, right? I mean, it's reasonably near the bottom, right? It's reasonably well priced for a long, not amazing. And if you can get in with a 1 or 2 pip stop, you can make 5R if it moves 10 pips. So think of it that way. Whereas if you're getting in here and we've already moved 5, 6, however many pips, risk to reward's not really going to be on your side. So just kind of think of it that way, right? To kind of weigh up your decision if you want to do it. But let's look at the 15 seconds, not the 5. Not really feeling that just yet. Okay, so really clean, same price action as always, right? Trend to the downside, don't switch bullish yet. Come into our zone, create some supply, we push down, we pull back up into our zone. So again, this can make a big difference on how you refine it. Not a big difference, but you could have gotten it even earlier, I've just noticed. But let's say you just have the inside bar drawn, right? This is where you come into it. This is where price clearly reacts, and then we get that 15-second change of character, and that's a very clear entry here, right? I've got it marked up as taken, around the EQ. You could have got in with a 1 pip stop, very aggressive, and there would have been 12R there, but let's just be sensible and let's just keep it simple to 2 pips for now. 2 pips is, I think, pretty big on this, but I think it probably covers almost the low, and you would have got out for your in and out 5R, right? So 1.5 pips probably would have been about perfect for this sort of trade to give you a little bit of a buffer there if you took it on the distal. So that's one way of doing it. But I just realized another way. So remember, if you can either refine it to the candle, or if you take the whole range, then you could have gotten a little bit earlier. It's very, very aggressive. But as you can see, price reacts. It should form a lower low here, but it doesn't. And then we close above the reaction. So that would be your entry there, right? Anywhere within that range I've circled. Yeah, probably like that 1.5 pips again. And then if you squeeze that out, you know, there's a maximum of 8.4 on the table, depending on your individual management style. But that second entry was definitely a little bit cleaner if you wanted just a little bit more confirmation, because not just the reaction, but you get the failed reaction and the change of character. So that for me is why, it's just a little bit clearer. And then we had this M1 flip within here, and then this drawn on is just, don't recommend doing this in this type of area, but it's just studying price action and seeing ways in how you could get in again. So the M1 zone reacts, it pushes up, price comes down. If that supply is going to hold, it should form a lower low, but then price reacts and breaks up to the upside. So then you get the failed reaction, and then you could have got in here, right? It's just being a bit more fractal with price there. And then looking for the hedge, price comes down. It's not super clear here, but I'm just looking for where's that first kind of real bullish reaction. It kind of occurs here. Look left, does it make sense? Okay. We get the breakdown, so then we get that change of character, pull back in, and then you're off. So yeah, bit aggressive, very, very kind of lower time frame entries there. Excuse me, but it is there if you want to do it. Let's get rid of the rest of that. So yeah, that's essentially very, very similar on Monday and Tuesday, both looking for the moves back into there and then just looking for your lower time frame entries. Built tons of liquidity right to be swept. Very, very, very similar setups. And then coming into London today, pretty much the exact same thing, right, which I've already explained. Almost happened 3 days in a row now, which is quite odd. Like I said, the first two areas I was looking at was these buy to sell wicks and then the zone just above. But what we ended up reacting to from was that 4-hour doji. But even if you're not looking at it on, you could literally just sit on the M15 and just go, I'm not going to look for an M1 entry until I see a change in character, back in line with the higher time frame intentions. And as soon as we got that at 8:15 London time, you could then drop down and then looked for your entry there. So here we go. So the first initial entry was really nice. If you didn't wait for the M15 entry, which is price M1 comes into it, alert would have been off going on for the M15. We form a higher high, we come down into our demand, we react, we push down, and then boom, there's your flip. Super simple entry. If you are super refined and you have it down to that one candle, and you might say to yourself, I mean, does it touch? It kind of looks like it does. Yeah, it looks like it does touch. But maybe you think, okay, well, it didn't actually react to it, I'm not going to take it, it's just a clean push through. This is why I think it's worth always just taking the range. And I just see where did the reaction come in. I look left, I'm happy enough that it's an area that makes sense. Boom, risk reward's fine, that's a 2-pip stop, you can get in. Now the only tricky thing about this is your management, right? So if you got in here, 2-pip stop, could have got away with a 1.5 as well, maybe stopped out when it came back here as well, depending on how you manage this one. And this is just a great example because I believe it was not running at 5R if you had a 2-pip stop. Yeah, it wasn't running at 5R, not even 4R, so you probably should have left your risk on the table at that point, I would argue. A great example of why, especially when you're trading pro trend from a really good area of value. Just let the trade play out, hold on to it. Now, the logical reason as well why behind that, it's not just kind of blind luck and hoping it's going to go, is because what's happened since you've entered the trade? Well, ask yourself this: if you're in the trade and you're sitting there thinking, okay, it hasn't hit what I need it to hit to remove risk or move to break even, but it's coming back aggressively, I think I'm going to get stopped out. What can help you is go, okay, well, is there supply in my area that has been created that price is just coming back to mitigate and it's going to go? And in this case, what happened? We got that change of character, we created fresh M15 supply, albeit a very minor area, right? But it's there nonetheless. And essentially all that price did was come back up and mitigate the EQ of the whole sort of buy to sell range, right? So we take the low to the high, right? And it's just come up, and that's why I originally had this drawn here, because potentially that's another way of getting back in, right? Want a little bit of a wider stop for that. And you're just playing what I said, that M15 change of character, pull back up, take the EQ of the range, and boom. So yeah, not necessarily the most sort of nicest of flips, but I much prefer this one here in terms of classic M1 price action, but just a good example of kind of leaving your stops open there and letting the trade play out. And then we absolutely blast down through, we get that break below, so it puts us into a new M15 range. And this is where I was looking at this 4-hour inside bar, had two M15 zones, obviously it ends up reacting to the lower one, and there was a very clean M1 entry here, right? Absolutely textbook. we react to the prior range, push down, push up, come back in, and then boom, there's your entry. And there's some 15-second entries down here and here, and this is just, you know, absolutely perfect example now of as soon as price comes into a level, especially when it's very, very overextended like this. I've seen this work so many times now that I have the confidence to take this, where literally you can just get in as soon as you see the 15-second chart start to turn around. So pull back into the range supply, push down, reaction above. Now this is a good example where as soon as you get that closure above, you know, especially when it's a small kind of, you know, 2-pip range, you can get your stop in a safe place. Don't mess around, just hit market, just get in at market, hit buy, because it never pulls back. And you know, for the sake of not even a micro pip, you've missed out on an absolutely blinder of a trade, right? So yeah, good example there on the seconds time frame. But anyway, if you missed that, it gave you this very classic M1 flip here. And then if you missed that or you wanted a bit more confirmation, what do we have in the 15 seconds? We pull up into supply, we react, there's the high of the reaction, we close above, and then we come back in. And you could have got in here a bit more aggressive, but there was a kind of, that's another way of getting in later into the move. And then another entry I was looking at is during the London lull, we know price is going to start to range, right? And we start to see it build this, right, all of these lows here and this liquidity. Now, what you want to look at is go look left and say what's unmitigated. Well, we have this whole sell to buy range here, right? That is being unmitigated. So you can mark that out, because what is that essentially going to be? That's going to be your M5 demand. So I know some of you don't even bother with the M5 chart anymore, but this is where it can really, you know, still be very much useful. So yeah, essentially it's just this whole range, right, rather than the refined candle. Price comes into there, and then you can look for a flip. Now, it didn't really give anything too clean there on the M1, but let's break it down on the seconds time frame, just to show you the opportunity is there if you like the level. This is more aggressive, but it is there. So what do we have? Price clearly trending to the downside. It was a little bit clearer on the 30 second, but I'll show you in the 15 second as well, because you can still see it there. You can, you know, you can imagine how the other time frames look generally when you're on one time frame. So yeah, this is the whole supply range, right? Price comes in, it reacts. Let me draw it so I don't get too confused. Finally, there we go. That was hard, wasn't it? M1. Okay, so this is why sometimes you just can literally take a whole quite a big range and just look for the reaction straight away. As soon as we come in, we react. So arguably, in theory, it should just go because the sell orders have been hit, but we don't. We push up, we close above, and then boom, you can get in long. Right, anywhere below that line, you can get in long. 1.5 pip stop covers the low, and it just flies from there. You're in an amazing trade again. Just absolutely shoots off. I'll show you the 15 seconds. But it's the exact same thing really, it's just a little bit more spread out. Yeah, there you go. Pushes in, reacts, and it goes off, and it gives you another opportunity. Right, fills up some more of the supply orders, it reacts, but it still fails to put in the lower low. We go up, and then you would have been filled here with that wick there, right? You would have come back in within this range. You would have taken the EQ of it, that would have been your entry there. Pretty much the exact same entry as the 30 seconds. So yeah, a few tidy entries there. Let's go to all these drawings. Yeah, and then we shot off, so probably wouldn't really be chasing price at this point. It's for shorts or for longs, not in a great area. But then remember, although we're coming off a 4-hour level, you know, price has now kind of proved what I was about to say. Obviously always nice to have the benefit of hindsight as well, but at this point, as price is shooting up, you're thinking happy days. You know, we've seen the sweep of liquidity, 4-hour demand, I want to go, but you have to remember you're still buying in a 4-hour premium. We've only just swept that daily high, so it's probably going to need a daily pullback, which is going to be a bit more significant. But more importantly, and more kind of, I guess, relevant to really what you're looking at for an intraday timing is until we close above this high here, this level, we are still bearish in the M15. So no matter how much sort of momentum you're seeing, well, look, perfect example now, we just retraced it. So sometimes it can be easy to get carried away with that. So as we come into this M15 supply level, I think I was talking about this with David briefly this morning, that I was curious because there was obviously then two supply points we could look at, this one here or this one here, right? Because this one's, I guess, arguably is mitigated. This one's a clean push, never liked that. So I was of the opinion that this was most likely going to be used as liquidity, and I wanted to see how we'd react to here. Now, as we come up into here, what I want you to do on your charts, if you haven't spotted it already, is do bar replay back to here, and then play price forward and then look to see if you can see the M1 flip entry short. Pause the video now and then come back and we'll go through it together. Okay, probably none of you bothered to do that. That's fair enough. I probably wouldn't, but it's a useful exercise if you did. Let's go through it together and see how this goes. So bar by bar, we're pushing in. We're still clearly bullish. Okay, we've had a bit of a pullback and a push up. So for me, that is definitely a area of demand, at least for the purpose of looking for a flip, right? So push up. What I want to see is price come back down into it and then react. So we continue to push up. It's all part of the same move. Okay, now we've come in and we've started to react, but we pushed in deeper. Okay, now we're getting that bullish reaction. So let's see if we can get another candle that doesn't break that low. Okay, so now that's showing me that the reaction is holding. So that's the true reaction. So essentially you can mark that out as your reaction point, however you want to do it. Let's make this a little bit cleaner. I need to come up with a bit more of a systematic system with my drawings, but you guys know what I'm looking at. Okay, so now I say to myself, as soon as we get a closure below that low, I'm happy to get short. So no, let's see if it's going to make a higher high. Just wicked it. So again, and this is something I want to stress as well, is some of you may see a wick break as enough, but yeah, I want to see a closure below. So just make sure you test it and see what you like. So now we've got the closure below. So now anywhere within this range, essentially I'm happy to get short. So let's mark that out and see how it sizes up. Okay, so anywhere within that range. So we're kind of talking about how do you do this with mechanical stop placement. Well, let's say you always want to take 2 pips. What I would do is just mark out 2 pips, and as soon as 2 pips is just above the high, that would then define my entry point, right? And I'll just leave my limit there. Then I'll be tagged in, and then I'll be most likely tagged out. Yeah, definitely be tagged out now. So I did just want to kind of go over that bar by bar of where the entry was. And yeah, if I was live trading, that's pretty much, I can pretty much guarantee you at the moment, especially the way I'm trading at the moment, that would have been an entry that I would have taken. It's definitely valid. It's pro M15 trend. We're coming there with a lot of momentum. We're coming there off against the 4-hour trend after a big sweep, after a big sweep of liquidity. But I'm more than happy to take a 1 hour loss in that place. But yes, you are trying to short a raging bull at that point. So yeah, it'd be up to you guys if you want to take that or not, but I definitely think that was a valid loss if you did take it, or if you were questioning whether it was, looking at it in hindsight. And then yeah, what do we have up here? We've had a failure to close above the high. So some very, very interesting price action at this point. Not massively surprising, because we haven't come into decent area value. I would like to see the 4-hour chart come down into here, so potentially that is what's going to happen. This looks to be just a liquidity grab, because look, we had some nice perfect equals here which were marked out, swept those highs now, and we've pushed down. Let's see if there was a flip entry. God damn, there's been so many nice entries this week. I think I'm going to have to rethink this whole taking August of trading. I don't think there's any months that are acceptable to miss out with. Oh god. Okay, so yeah, this is our last range. Let's draw this on properly. Bear with me, because obviously I haven't seen this price action yet. So that would be the break of the low. Look at this, absolutely beautiful. So you can either take the whole range or refine to the inside bar. And there is your absolutely perfect flip entry right at the top of the range after grab of liquidity. You could have got away with a tighter stop, but let's be conservative for the sake, and let's target the M15 low. There's literally I can't go, if you literally just stick to the outer of these ranges with the M15, right, and you trade the lows and you trade the highs and you just wait for that first M1 or 15-second flip, however you want to do it. I'm just struggling. Need I say more? It's all here. It's all here. It's just all in the mind, whether or not you can just not get pissed off that you take a loss here. Just keep executing that trade. As soon as the same setup occurs, boom, take the trade. And then yeah, just manage the trade accordingly. So I was looking to see these buy to sell wicks towards demand, but clearly not. And we've absolutely shit the bed. So yeah, amazing price action there. So in terms of kind of forecast for the rest of the week, this demand's pretty much been mitigated now, so I would expect these lows to be run, looking for price to come down into the discount, potentially this massive 4-hour wick zone, but obviously anywhere we could easily, as soon as I start to see the M15 start to get that change of character, switch bullish again, I will then be looking to look for those longs. But yeah, for now we are still bearish. So yeah, it's just the same thing, right? Mark out your range. That's still the high for me. This is the low here, so let's mark this out properly. I will be waiting for a closure below this M15 low. Let's move this across. And then we would be within the new range. Obviously, it's a very, very, very clean push at that point, so we'll have to see how it plays. Price action is getting a little bit whippy now, so this is just a classic case of, if we were to come down, sort of break this low, and then start to kind of get flips and then change his character, be looking to play that back up into the EQ, probably take some heavy profits, or you may want to hold on because the 4-hour chart could still be switching bullish at this, or staying bullish at this point. Management does get a little bit tricky when you're trying to play 4-hour pro trend, but we haven't come into discount prices yet, so it can happen. And if you always hold all of your volume on from trades here, trying to expect this high to get run, you can end up taking a lot of break evens and giving a lot of profit back. But if you were to take the same entries down here, right, that's obviously going to be much higher probability to hold on to those trades there. So definitely do make sure you pay yourself, but there's not too much in this M15 leg. Potentially something within this wick here of this doji, but otherwise, yeah, let's see how price reacts to down here, or we may just sweep these lows and go again. But just follow, it's the same thing. I don't see the point kind of me spending ages and ages going over kind of potential forecasts of drawing out all these different scenarios, because it's the same thing over and over again, right? We're just looking for those sweeps, looking for the M1 flips, and then targeting the next week high low or 15-minute supply zone or demand zone that is in the way. And off we go. But yeah, for now, with literally the current price action we have, I'd probably expect, because that's a run on liquidity, we failed to switch bullish, but probably going to run this week low now, because this week low has failed to do its job, and then just continue to look to trade the M15 bearish range till we come down into this 4-hour discount, till we come into demand, look for it to switch bullish. Then if the M15 is bullish, in line with the 4-hour being bullish, it's go time to then look to run this week 4-hour high, so on and so forth. But because we have these nice big ranges, there's more than enough risk to reward to play those counter trend movements as well. Ideally, if you get mitigating something on the left as well, always add some extra confidence. But yeah, I hope you guys took some value from that, and I hope you guys have a good end to the week, and I will see you in the next one. Cheers, guys.